Good afternoon, everyone. Today is Monday, the 12th of March, 2012. Let's take a look at these markets. It was pretty quiet today. The S&P 500 finished with just a penny gain, but I think it's good to see that we're seeing a quiet market here as it digests the gains from last week. So, of course, last week we had the gap lower on Tuesday, and then nice recovery back up towards the high end of the range at that 138 level, which, as we know, is a multiple year high in here. In fact, going back to 2008. So, the S&P 500 could be headed for about 145-ish. It doesn't mean that's where it will go, but that's where it looks like the next potential level of prior resistance, which did hold as support, is to be found. So it's just something to keep in the back of your mind about where we're headed. I was talking to someone this weekend who about this inverted head and shoulders pattern, saying how it had hit that pattern target, and now what? What does that mean is next for the market? Well, we need more clues from the market. We need the market to tell us what's next. But so far, it's behaving well. As we know, we had a little shakeout below the 20-day moving average. That got us to go cautious, mainly because it broke this bigger level of support too at 136. That, as we know, is going to be an important level for this market to hold this week as well, is 136. And more particular, when we take a look at a 10-minute time frame, it's the 136.5 area, which is about where that 5-day moving average is. Now, it doesn't, because we're on an intraday time frame, you can't just put 5 on your chart. You have to do a little bit of formula. And when it comes to the charts that I use, which is Realtick, it's basically, if you look at, and this would be true for any charting platform, but this is the one that I use because I think they're the best, and I've been using them a while, and they sponsor this show on Mondays as well. But back to, let's take a look at the 30-minute time frame. If you think about the market being open from 9:30 to 4 p.m. each day, that means the market is open for 6.5 hours of trading. So over the course of 6.5 hours, there's 13 of these 30-minute periods. So over the course of 5 days, there's 65 of those 30-minute periods. So when you look at this red moving average, which approximates the 5-day moving average, what we're using here on an intraday basis for 30-minute candles is a 65 period moving average, with the periods being 30 minutes. So if you wanted to do that on a 10-minute time frame, you would take 3 times as many candles and average them. So 65 times 3, or in this case 195 period moving average for the 5-day moving average to show up on a 10-minute time frame. That's something I talk about sometimes. Once in a while I get some questions, so I like to reiterate it. Anyways, let's go back and take a look here. 136.5, that's the level we're going to want to see hold. It's good to see that basically the 2-day volume weighted average price held on a closing basis today, as did the pivot. But again, it was a pretty quiet day, so not a lot to read into it for now. It just looks like a quiet consolidation of the gains we saw last week, and perhaps we need to digest them a little bit further, but it's bullish to see that it's not pulling back. The Russell 2000, I'm sorry, not the Russell here, but the Nasdaq held an important level. It held up above the important level we were looking at 63. And in this case, the near-term level I think is probably near that 5-day moving average as well. We wouldn't want to see it get below probably 64.30 to 64.50. So this little band of prior importance in here, this is where we want to see that if the market does pull back a little bit, that would become our zone of support. And if it does pull back, I think that's a good thing. We could maybe build, you could look at this as a cup, and then we would build a handle here to break out past these recent highs. But we are holding up near highs. That's important to note. Today's advanced decline was 1,627 decliners and 1,366 advancers. So it's been pretty positive recently, and today we saw a little bit of a slowdown, but definitely not any damage to be concerned about underneath the market. The Russell 2000, we know it bounced from that 50-day moving average and trend line area, as well as some important near-term Fibonacci. But this is the key level that it appears so far to be a shakeout below that 81 level. This market, as we know, had been trading 81 to 83 and a quarter basically. It broke down hard last week. We had a couple days of selling, and then it bounced back very nicely, and it's holding this 81 81 level. So that's good to see. I think that you could even give this market down to about 80 and a half, maybe $80.40 before we'd really be concerned. I think it would be good to see a little bit of another shakeout and then it gets going higher. But near term, just really kind of neutral back into this range. But after experiencing a shakeout down to the 50-day moving average, you have to look at that as a bullish type of shakeout, and more likely that the market should be able to continue higher. Semiconductors, these guys, found support just above that prior resistance in the 50-day moving average as well. That was also, if we call off of the December lows to the recent highs, almost a exact 38.2% retracement. So when we drill down to the shorter term time frame, we had support found at an important level, which was this 33 area, which was tested earlier this year. But more importantly was that 34 level that was broken. We were able to get back above that, and we're still closing above that. So I'd like to see 34, especially since it is where we have that rising 5-day moving average. I'd like to see that hold. But, as we remember, 34.50 was an important level as well. So it's kind of back into this neutral zone. It is important to realize, though, that here we had this pullback and we had a rally. So this is looking like, here a pullback and a rally, pullback and a rally. This is looking like a lower high so far. What we want to see is some support established, and then it breaks past there so we can see a higher low establish itself. So the semiconductors, because the daily time frame is still in a nice uptrend, we give them the benefit of the doubt, but it's not an all clear to buy. Perhaps above 34.50, we get a little bit more confidence to the upside, because that says we've put in a higher low. And the financials, as we know, came right down to that magic number at 1440, and touched it to the penny last week in its correction, and then bounced right back to the top end of the range up at near this $15 level. So here again we have a very important level at 1470. Just above that, again, the 1470 has been an important level as well. So that's something we want to keep an eye on. It's now where we have that 5-day moving average. So if we can kind of consolidate between 1470 and 1495, that would be a good thing to see, and then build some energy for a continued breakout. If we saw that continued breakout, I think the next likely target would be up near about $15.40 in the financials.